Welcome back, guys, to the Algo bot introduction video series here. In this video, we're going to be looking into how to read the signals and how to manage your trades, basically. If you're looking for the introduction, if you haven't watched the introduction to the Algo bot, what exactly the algorithm is looking for and how it's firing off the signals, make sure to watch the video before this, basically part one to this introduction, where I break it down there. In this one, we're not going to be looking into that. We're just looking at the actual signals, how to read them, and how to manage your trades so that you can maximize your profits and minimize your losses. So let's go ahead and jump right into it. I pulled up a few examples here of the trades that we're going to look at. So let's go ahead and start with those. Let's start with AVAX here. So I'm looking for the AVAX signal, which is this one right here. So when the bot fires off an alert, it's always going to say, what crypto it is and which time frame this signal came from, right? So that's the first thing that you're going to see here. Next thing you're going to see is the direction in which the signal is. So long, obviously, if we think price is going up. Short, if the bot thinks price is going down. Then it's going to show you the leverage and position size. The leverage is being calculated so that basically your risk, as far as the money that you're putting into each trade, is always the same, right? Regardless of how, because the bot is building a trade plan with stop losses and targets, and it's calculating so that your money, if you're always investing $100, regardless which target you hit, you're always going to hit the same amount of return. And if you hit the stop loss, you're always going to lose the same amount of money, right? So that's what the leverage is calculating here. Now, position size, this is for you, right? So this is where you have to calculate your position size, right? And this is going to be different for every single person because it's going to depend on your bankroll, how much money you have in your trading account, right? So when position size says 2%, that's the max amount of money that you should lose if we hit our stop loss. So you need to calculate basically the entry and the stop loss. You need to calculate that move down and calculate what your position size should be so that if it moves down to the stop loss, you only lose a max of 2%, right? So it doesn't mean that you should be risking that your position size should be 2%. It means that if we hit the stop loss, your max loss is 2%. So you got to calculate that. There's plenty of position size calculators out there that you can take a look at if you just kind of Google it. It's pretty simple, and the whole idea is you can see here, this is just a random one that I just clicked on. The whole idea is that you're not trading with your entire account. This is your entire account. You only want to lose a small amount of it if you lose the trade, right? So that's the whole idea behind that. After you've done all that, then the next thing that the bot is showing you here, the signals are showing you are the entries. It gives you the exact entry, tells you whether you should be using a limit price or a market order. So a limit price means that you should be entering pretty much at this exact price. When it says market, then you can just go ahead and market order. That means it's basically a range that you can enter at. So that's something else that you should look at. It doesn't always you don't always need to enter at the exact same numbers. You can enter if price has gone lower but hasn't hit the stop loss, for example. That's fine. And you can enter if it's gone up a little bit but not too far away. I would say you don't want to enter once it's really close to target 1, or if it's already hit target 1, then you don't want to be entering into that trade at that point. Okay, and sometimes the price won't even come down to this limit price, and you'll notice that it'll cancel the actual trade because this price didn't get hit. So that's for the entry, something that you should always be paying attention to. Okay, Now, obviously here, then you're going to get your targets. The main targets that we're looking at is going to be target 1, because that is what the algorithm is building this trade around, to hit target 1 on an average of about 83%, right? So that means, what does that mean? Long term, over a large amount of time, trades are going to be around that 83% success rate at target 1. Now the thing is, if you're not taking profits here, sometimes it's going to hit target 1 and then stop out. So you're going to end up losing on that trade because you didn't take any profits at target 1, and this algorithm is built around hitting target 1 the majority of the time. Now target 2, it starts to drop off the success rate, right? And as you continue down, it drops off further and further away. So if we pull up here the statistics over the last 2 weeks, this is in December, the last 2 weeks, we can see that we've hit target 1 on average 89% of the time. Now that's not always going to happen. It eventually evens out to around that 83% area, but right now it's at 89%. Look at the drop off. It drops off by 9% at target 2. So now we're hitting at 80%. Then look from target 2 to target 3, drops off another 11%, right? Now we're hitting at 69%, and that's a 20% difference from target 1. Then at target 4, again, another drop off, drops off 12%. And now we're talking about a 42% difference between target 4 and target 1. And of course, target 5 is the lowest win rate at 38%. That means that you should not be expecting target 4 and 5 to hit that often at a time, right? Target 4 is getting there about 50% of the time. Target 5, you're going to hit that 1 out of 3 trades, basically. So, and that's 1 out of 3 on winning trades, basically. So, that's something that you need to keep in mind when setting up your take profits, right? You have to be looking to take profits at target 1 at all times, right? So let's talk about that. Let's talk about taking profits. How should we be taking profits? So you can either there's different ways that you can do it, and what I suggest is that you play around with the different methods and see which one fits your risk tolerance the best, and basically your personality, because trading is a lot about personal preference. So there's no one correct way to do it. It's gonna depend on your personal preference, right? So you can break it down into 5 different places to take profit. 20%, 20%, 20%, 20%, right? Each one. What I would suggest is probably taking the most amount of profits at target 1, maybe 25%, maybe 30%, and then having these as smaller areas to take profit. So, because the idea is you're gonna be hitting these 2 targets the majority amount of the time. So maybe you want to take 25%, 25%. So you've taken half your positions off in the first 2 targets. Now targets 3 through 4, you can play with a little bit more when they do hit, right? So you've taken half your position is off the table at targets 1 and 2. You could move your stop loss, for example, up to the entry at that point. And then you're playing around basically with free money, because you've already taken profits. You've taken your risk off the table because your stop loss is at the entry. And now you can ride this however you want. You can play this however you want. It's basically risk free at that point. And you could do 10, 10, 10, and then leave the rest as what I like to call a runner. A runner is, if we hit all the profits and price continues to go up, then we continue to collect profits and we set up a trail stop, right? So you could do something like that. You could do 15, 15, 15, and then you leave a smaller position. So you can play around with this however you want for targets 3 through 4. But I recommend taking majority of profits at targets 1 and 2. That's how you're going to be the most successful following this bot. Okay, so that's going to be the best way to do it. Now let's talk about how to move our stop losses. And usually the way that I like to play it at target 1, I like to usually leave my stop loss at the same spot. At target 2, I like to move it up to the entry, right? And then at target 3, now you can move it up to target 1. Target 4, you can move it up to target 2. Target 5, you can move it up to target 3. That's I would say the rule of thumb to just start playing with. And then again, it's gonna come down to personal preference. So then you can build it off of there. If you're more conservative, then at target 1 you can move your stop loss up to the entry. Now you're risk free, right? You've taken profits at target 1. If you go back to entry, you close your trade and it's a successful trade, right? Maybe at target 2 you still want to give yourself some room. Maybe you've taken profit, and you want to keep your stop loss there. So maybe you want to wait for target 3 to then move your stop loss up to entry to break even. At target 4, you can move it up to target 1. At target 5, you can move it up to target 2, and so forth. That's another way to play it. So it's gonna be based on personal preference how you want to play it, because it's gonna be different for everybody, And if we take a look at this example here. So this was the avalanche trade, the AVAX trade that was signaled here, right? This is the exact setup, right? So we have our entry, we have our stop loss, and our 5 targets, 1, 2, 3, 4, 5. So let's see how this trade plays out. We enter the trade, and we can see right off the bat, this hit 4 targets, right? In the 1 hour that we were in the trade, this hit 1, 2, 3, 4 targets. So in this event, when you have a trade like this where it hits all the targets so fast, you should, once it hit target 1, I would have probably left my stop loss. At target 2, I'm moving my stop loss up, right? I'm moving it up over here to break even at that point. So now it's a risk-free trade. Then we hit target 4. I move my stop loss up over here to target 1. And you can see that it started to come back down. My stop losses would currently be at target 1 or target 2, right? It depends how you're playing it. So if you're at target, if you're doing where you're staying 2 targets behind, then at target, when you hit target 4, it would have come down. You might have been stopped out here. Again, you still made profits. You've taken profits on all of them. So the rest of your position got stopped out at target 2. It's fine. You won the trade, right? And if we continue here, we can see that this trade ended up hitting the final target. So if you had your stop loss at target 2 here, you would have been stopped out before it continued up. So that's kind of what you have to think about when setting up your stop losses. How do you want to set them, right? Do you want to set them up where you give yourself a chance to hit that final target, or do you want to be more conservative with your stops? And if you stop out, it's fine, right? And you'll be okay with that. So let's look at it one more time. This time we're gonna look at it on a smaller time frame here. I want to look at it maybe on the 30. Let's look at it on the 30-minute time frame. So we can see right off the bat, we hit our entry. We hit targets 1 and 2, right? So at this point, target 2, I would grab this. Boom. I'm up to break even. Let's continue to play this out. All right, at this point, we hit targets 3 and 4. So this is where you kind of gotta decide. I always recommend at least at target 2, break even. Here you kind of gotta decide, do you want to, how close you want to play, right? Personally, I have a higher risk tolerance. I don't mind just going up to target 1 and seeing how that plays out. Obviously, we know how this ended up playing out. We came back down here to target 3, so we would have been stopped out there. You can see it hit that target 3 again, and then it went on, hit the final target, and continued up higher, even higher than that, right? This is why we have, why we like to have runners as well, so that we can catch these when they continue up like that, because this was a massive move to the upside. You can see there, this continued all the way up to $40, right? So if you were holding your runners, you would have probably been stopped out on this move back down, unless you have your stop loss. You know, depending where you have your stop loss at. I like to usually put like a trail stop type of thing, so it just it's done automatically. So it's gonna depend on that, and you know, we just kind of let the trade play out. We'll see that that it's still kind of in that range, right? Now let's look at the next setup here. This is another trade, SNX. So let's look for SNX. So this was also on the hourly, right? We can see the leverage, position size, etc. This is the setup here. You can see it on the chart, and I've set up the same exact trade here. So again, let's look at this on the 30-minute, just so that we kind of see in real time what was happening. I'm gonna even go down to 15-minute. So let's slowly play through this. We can see this was our entry, and actually let me change the color on these, because if not it's confusing on where my entry is. So let's just make these green. These are our targets. And let's continue here. You can see, boom, we hit target 1, right? So target 1's been hit. Now it's up to you if you want to move your stop up or not. You don't have to, if you want to move it up, you don't have to move it up to entry. You can move it just below the recent lows. So that's one way you can play that. We can see we're still there. Oh, but what's going on now? You can see price is kind of stuck and going down. So if you would have moved your stop loss up here to break even at target 1, you would have probably got stopped out there, right? Now it could be good and it could be bad. If we continue to watch this trade play out, you see that this trade begins to go down into a loss, right? As we see it play out, this trade all of a sudden is almost at the stop. So in this scenario, this is why for those that are more conservative, you might just want to stop out at break even. You took your profits at TP1, the first target, and you stopped out the trade, the rest at break even. You made your profits, right? Even though they might be small profits, hey, profits are profits, and over time they will build up. You don't have to worry now about being in a losing position, because you just went from a winning trade to a losing trade, right? So if we keep playing this out, let's see if it hits our stop. You can see it's getting close, but it hasn't got to our stop yet. It's got even closer, and we got a bounce. So what just happened there? We had our stop and it almost went down to it, but it didn't quite get there. If we go back to the hourly, right, and we look back on the price chart, we can see what the algorithm is watching, right? It gives us that idea. So we see, let me get a rectangle here. Look at this. This is what we like to call a liquidity pool, right? And that's exactly where the price went. If we had our stops below here or anything like that, we would have got stopped out. But the bot knows that that liquidity pool is there. It knows that it's there, and it knows that the price likes to retest previous liquidity pools, previous imbalances. So it builds up the trade plan so that we're below that, so that we're not stopping out if it does end up testing that liquidity pool. And that's exactly what happened in this trade. And if we keep watching to see what happened, look at this. The trade went down to the liquidity pool, and now it's hit target 1 again and target 2. We keep playing it out. That's currently where we're at. So this is live right now. We've hit targets 1 and target 2. So now at target 2, now you may want to move up to break even here. And if you're break even, again, you might have stopped out here, right? So it depends how you want to play it. You don't have to go to break even. You could still, maybe just go below the recent lows type of thing. Just to, maybe you want to be over here below this low, whatever the case is. But you should be moving up your stops at least to some level, so that you're not taking that same risk again, and your winning trade doesn't turn into a losing trade. Now let's take a look at one last example here. This is another recent trade that we took here. This one you can see was given on the 30-minute time frame, and then this was a short position. So this one's not a long. This was a short 24x leverage, right? So let's take a look at how this one plays out. This is on the 30-minute time frame as well. So we entered here. This is our stop over here, and again, notice where the notice this liquidity pool here. So there's a lot of liquidity here, and the algorithm knows that, right? It knows that's there, so it tries to build it so that hopefully we don't get stopped out. So you can see here we've hit target 1, we've hit target 2. At that point, it's up to you if you wanna move your stop losses or not. If we continue to watch this play out, almost hit target 3, but not quite. If you would have had your stop loss at break even, you do stop out here, as you guys can see. So that's why you have to decide. Now, another thing you could have done, instead of being break even, you could have put it just above the recent highs here. So you could have maybe had it over here instead of at break even, right? So that you're still giving your chance. You're still being conservative. You're still giving yourself a chance to potentially continue riding this if we pull back to that entry. Now on this one, you can see here, we hit the third target. We pulled back again. Boom, we just hit target 4. Pulled back again. Look at this. This pulled back all the way back to the entry, right? So if you would have been back here, if you would have put this here after hitting target 4, or if you would have been at target 1 after hitting target 4, you would have got stopped out there, right? Which, again, it's not bad. You've taken profits 4 times, and now you stopped out in profit. And we continue to play this out. We can see it went back down to target 4. Does it hit the final target? Yep. So it ends up hitting that final target. Again, in this trade, if you didn't leave your stop behind, like further back, at least behind the 200-day moving average at this point, not the day 200 moving average EMA on the 30-minute time frame, you would have ended up winning this trade, but you wouldn't have hit all the targets there. So that's something to always consider on your trades. And remember, a winning trade is a winning trade. That builds up over time. Every trade doesn't have to be a home run. All right, so that's another thing to keep in mind. The final thing I want to just kind of touch on is entering trades. You don't always need to enter your trades one lump sum at the entry, right? So let me see. For example, let me see over here. So this one, this stop loss was somewhere here, right? So when a trade is signaled, you can actually take a look at the chart yourself, and if you see on the chart that there's some potential liquidity pools down here that the price might revisit, you can ladder your entries. So you can take half your position here, half your position in this liquidity pool, and leave your stop loss the same. Now, if you lose this trade, your loss shouldn't be as big as if you just entered your full position here. So, for example, if the risk is 2%, you could enter 1% risk here, 1% risk at this liquidity pool. What this ends up doing is averaging down your entry. So now instead of your entry being at $4.232, if you entered down at $4, for example, your second entry, now your entry would be somewhere around here, right? $4.11, $4.12. So now at target one, you're making a whole lot more profit at that point, and you're getting a better risk to reward by entering the second half of your position down here versus your full position up here. So that's another way. Again, this is a more conservative approach to this, but it's another way that you can play this these signals, and this is all going to depend on personal preference, right? So depending on the type of person you are, your risk tolerance, your et cetera, is how you're gonna set these up. I'm just giving you guys the ideas and the rules of thumb, and then you guys are gonna be changing this based on personal preference. So the last thing is, when markets are very volatile, don't take multiple entries in the same direction, because when there's a big move down like this, then you could potentially get stuck and get stopped out. We saw that earlier. So just kind of always be aware of what Bitcoin is doing, because for the most part, altcoins are going to be following Bitcoin. So just be aware overall of the market, and you don't need to be able to analyze them yourself, but using our market report that we do every week in the Discord, plus just kind of looking at the chart, you can get an idea of what could potentially be going on here. And just another way to mitigate and manage risk. So hope you guys enjoyed this. Hopefully this, I know this went on kind of long, but hopefully this gave you guys, really broke down how you should be playing these trades so you can maximize your profits and minimize your losses.